Hi guys, my name is Alex Rivera. I'm a CPA that specializes on law firms. And in this video, we will break down the numbers that really matters when running your law firm. All right, let's get into it. Let me be blunt. If you're running a law firm and the main number you look at is revenue, you actually don't know how your firm is doing. We see seven-figure firms all the time that look successful from the outside and are quietly struggling with cash, unpredictable partner draws, and hiring decisions that feel more like guesses than strategy. Well, that's not because the firm is failing. It's because the partners don't have the financial visibility. In most law firms, the real risk isn't a lack of work. It's running a complex business without knowing which numbers actually drive it. And if you're relying only on your revenue to tell you that story, you're already running behind. Let me tell you a story. There was a firm that came up to us and they were doing about 1.4 million a year. A solid practice, smart attorneys, they were so sharp, plenty of work. But every conversation sounded the same. Hey Alex, cash feels tight. Hiring, it's like guessing, it's risky. Whenever we get our reports, they don't match our reality really. I mean, let me tell you, they had financials, they had a bookkeeper, but what they didn't have was clarity. So instead of guessing, what we did is rebuild the reporting around these 10 numbers that quietly tell you whether your law firm is healthy or headed towards friction. Okay, so let me walk you through those numbers and how they actually work together. We always start with profit, not revenue. Specifically, the net profit margin, which is just the net income divided by total revenue. It's the simplest question that somehow gets skipped. After payroll, rent, software, and taxes, is the firm actually keeping money? In a well-run law firm, that answer usually lands between 25 and 35%. So, in this case, the law firm that we were talking about, they were doing about 1.4 million a year. We expected to see roughly 350 to 490,000 left over at the end. When we see margins under 15%, it's almost never because the attorneys aren't working hard. It's because something is quietly off. Maybe pricing that hasn't kept up, or it could also be too much overhead, or it could be staffing decisions that made sense once and were never revisited. Once we see the margin, the next question is obvious. Why does it look like this? So that's when we go to realization. Realization looks at how much of the time your attorney's work actually survives the billing process. This means that if the hours get worked but don't make it into the bill or get discounted later, that's revenue leaking out before it ever reaches the client. Strong firms usually realize about 85 to 95% of the work time. When this number drops below that, it's a sign that something is slipping. It could be scope creep, it could be pricing hesitation, or it could be a culture of writing things off just this one time. Now, let's just say for this firm, everything was working just fine. So the work is getting billed. That is great, except billed work doesn't pay the bills, cash does. That's where we start asking for the collection rate. The collection rate becomes a make or break number because it compares what you actually collect to what you bill. We see firms doing everything right on paper and still feel stressed because they only collect 80 to 85% of billed fees. On a $1.4 million firm, that gap alone can mean six figures that never show up to your bank account. So healthy firms collect closer to 90 to 98%, and that difference is often the line between calm decision making and constant financial tension. Once revenue is real and collectible, we step back and ask a different question. Okay, is the firm productive for its size, or is it just busy? That's where revenue per lawyer comes in. It's simply the total revenue of the firm divided by the number of attorneys. Most sustainable firms land north of 250,000 per lawyer, often much higher. When that number is low, it's rarely about effort. It's about leverage, or it could be the pricing, or the firm is taking on work that looks good but doesn't actually scale. After we've solved that question, then we look at how attorneys are spending their day-to-day. Utilization tells us how much of the workday is billable versus admin, reactive, or unfocused work. When utilization drops below 50%, the firms start paying professional salaries for non-billable activity, and no one quite knows where the time went. At this point is when firms say, all right, we need to grow. And this is where mistakes get expensive because we start investing in marketing without knowing. Growth only works if client acquisition costs make sense compared to client lifetime value. If you don't know how much it costs to bring in a new client or how long that client typically stays, marketing stops being a strategy and starts becoming gambling. Even with great clients, cash can still feel tight. That's when we start looking at days sales outstanding. This is how long it actually takes to turn a bill into money. Once collections stretch past 60 days, the firm isn't really practicing law anymore. It's financing clients. For contingency and flat fee firms, we go one layer deeper and look at the work in progress to cash conversion. How long does it take from the opening of a case to seeing the real cash? Long cycles aren't wrong, but without planning, they create constant pressure. And finally, we look at leverage. How many associates and paralegals are supporting each partner? When the leverage is too low, the lawyers stay buried in the work they shouldn't be doing. But when it's too high, without structure, margins collapse. The goal isn't more people, it's the right delegation. That's where growth becomes intentional instead of chaotic. When firms come to us, we don't drown them with reports. We design systems, weekly dashboards, clear KPIs, cash forecasting tied to staffing and taxes. For that $1.4 million firm, margins nearly doubled, cash stabilized, hiring stopped being scary, and decision became simple again. Not because they were working harder, but because the numbers finally told the truth. And if you're running your law firm and don't know most of these numbers, you're not failing. You're just flying blind. And blind growth is expensive. If you want real clarity, not just clean books, book a call with us or comment dashboard and we'll send you the exact KPI framework we use with our law firm clients. Because law firms don't break from lack of work, they break from lack of visibility. Well, thank you for watching and I'll see you in the next one.